In the fast-paced world of artificial intelligence, a fascinating story of disruption is unfolding. Today we're going to explore how a relatively small player called DeepSeek AI is following a classic playbook that could reshape the entire AI industry. But to understand this story, we first need to travel back to 1997 when a Harvard professor named Clayton Christensen introduced a revolutionary idea that would change how we think about innovation. Christensen's theory of disruptive innovation explained how small companies with limited resources could successfully challenge industry giants. The key: start at the bottom of the market, where established players aren't paying attention. Think of it like this. Imagine a staircase. At the top, you have industry leaders serving their most profitable customers with high-end products. But what about the customers on the lower steps, the ones who can't afford or don't need all those premium features? This is exactly where DeepSeek AI enters our story. While giants like OpenAI and Anthropic focus on pushing the boundaries of AI capability with increasingly sophisticated and expensive models, DeepSeek has taken a different approach. They're offering something that might not be quite as powerful as GPT-4 or Claude 3. But here's the crucial point. For many users, it's good enough. And it comes at a fraction of the cost. Let's break down exactly how DeepSeek is following Christensen's disruption playbook. First, target the overlooked. DeepSeek has focused on segments that bigger players might consider too small or unprofitable: independent developers, researchers, startups operating on tight budgets, and companies in emerging markets. These customers don't need the absolute cutting edge, they need practical, affordable solutions. Second, open source strategy. By making their models open source, DeepSeek has created a powerful advantage. Developers can inspect, modify, and run these models locally. This isn't just about cost, it's about giving users control and flexibility that they can't get from cloud-only solutions. Third, continuous improvement. Just as Christensen predicted, DeepSeek isn't standing still. They're steadily improving their models while maintaining their cost advantage. It's like climbing those stairs we mentioned earlier, but building their own path upward. This is where the disruption playbook gets really interesting. According to Christensen's theory, established companies often can't respond effectively to this threat. Why? Because their business models and cost structures are built around serving high-end customers. Think about it. If you're OpenAI or Anthropic, your most profitable customers are large enterprises willing to pay premium prices. Your entire organization is structured around serving these customers. Suddenly matching DeepSeek's pricing and open-source approach would mean completely disrupting your own business model. This creates what Christensen calls asymmetric motivation. The giants are motivated to keep moving up market, while DeepSeek can gradually improve its offerings while maintaining its structural advantages. But there's another factor at play here: network effects. As more developers build applications using DeepSeek's models, the ecosystem becomes more valuable. This creates a flywheel effect that's hard for competitors to stop once it gets going. The beauty of DeepSeek's approach is that it creates sustainable cost advantages that are difficult for incumbents to match without cannibalizing their existing business models. Their open-source approach and focus on efficient model architecture gives them a structural cost advantage that aligns perfectly with Christensen's theory. However, this isn't a guaranteed path to success. DeepSeek faces several significant challenges. First, the technical gap between state-of-the-art AI and good enough alternatives might be larger than in other industries. Some applications truly do require top-tier performance. Second, unlike many historical cases of disruption, today's AI leaders are well aware of disruption theory. We're already seeing them take defensive actions like introducing lower price tiers and more accessible models. Third, even as a disruptor, developing competitive AI models requires significant computational resources and expertise. DeepSeek must maintain access to these resources while keeping costs low enough to maintain their disruptive advantage. But regardless of how this plays out, DeepSeek's emergence is already changing the AI industry. We're seeing more segmented markets with different providers serving different need levels, increased pressure on pricing across the industry, and accelerated innovation as incumbents respond to the threat. Their approach is driving the democratization of AI technology, making these tools accessible to a broader range of organizations and developers. This could lead to a more diverse and innovative AI ecosystem, where different providers serve different market needs and price points. Looking ahead, three factors will be critical in determining whether DeepSeek successfully follows Christensen's disruption path. First, how quickly can they improve their models while maintaining their cost advantage? According to Christensen's theory, successful disruptors must improve fast enough to serve mainstream market needs before incumbents can effectively respond. Second, can they build a strong enough developer ecosystem to create lasting network effects? The growth and vitality of their developer community will play a key role in their ability to challenge established players. Third, how will broader market changes, including regulations and technological breakthroughs, impact their strategy? The evolving AI landscape could either accelerate or impede their disruptive potential. We're watching a fascinating experiment unfold. Can a smaller player, using Christensen's classic disruption playbook, succeed in one of the most technically challenging and fast-moving industries ever created? Whether DeepSeek ultimately succeeds or fails, their story is already providing valuable lessons about innovation and competition in the age of artificial intelligence. They're showing us that even in this cutting-edge industry, some of the most fundamental principles of business strategy still apply. The next few years will tell us whether DeepSeek becomes a canonical example of successful disruption in the AI era, or whether the unique characteristics of this industry require us to update our theories about how disruption works. Either way, one thing is certain: their journey is forcing us to rethink what's possible in the world of AI and how the next chapter of this industry might unfold. DeepSeek's emergence demonstrates that, even in a field dominated by well-funded giants, there's still room for innovative approaches that challenge conventional wisdom and potentially reshape the entire industry landscape.